What's happening, crypto fam? Get ready for a lightning-fast update because the news cycle is absolutely on fire today. We've got seismic shifts, groundbreaking predictions, and strategic moves that could redefine the landscape. You do not want to miss what's unfolding right now. From international financial maneuvers to the bleeding edge of digital asset strategy, we're diving deep into the stories that matter most. Buckle up, because this is Bitcoin Bulletin, and we're bringing you the unmissable intel. First up, a major global player is making waves with its bold Bitcoin Treasury strategy, and the prediction markets are going wild over its potential future value. We're talking about a significant milestone that could signal a massive shift in how nations view digital assets. And that's not all. We're also seeing a fascinating divergence in performance between two of the biggest names in the digital asset space. One is showing remarkable strength, outperforming the other, and hinting at a potential new era of capital reallocation. Could this be the start of a major trend that investors need to be aware of? Speaking of capital reallocation, our next story dives into the broader financial landscape. We're exploring how capital markets are dynamically shifting and why Bitcoin is becoming an imperative in this evolving environment. What does this mean for traditional finance and the future of investment? Finally, we're heading to the East, where a forward-thinking company is implementing a unique Bitcoin Treasury strategy, potentially paving the way for wider institutional adoption in a major economy. This could be a game-changer for how global markets integrate digital assets. Stay tuned for all the details, and make sure you're subscribed and have that notification bell on so you never miss an update. Global markets react as prediction markets surge on El Salvador's Bitcoin Milestone. The financial world is abuzz as El Salvador's President Nayib Bukele has brought significant attention to the burgeoning interest in prediction markets, specifically those wagering on the nation's substantial Bitcoin holdings, reaching a monumental $1 billion by the close of 2025. This development underscores a growing global curiosity and speculative engagement with national-level digital asset treasury strategies. Bukele took to the social platform X to highlight a notable increase in activity on Kalshi, a prominent prediction market. He pointed out that the odds for El Salvador achieving its $1 billion Bitcoin treasury target before November 2025 had dramatically climbed, surging from an initial 20% to an impressive 38%, before settling at a still significant 27%. This fluctuation in odds indicates a heightened level of market anticipation and belief in the country's Bitcoin strategy. In a swift response to the growing interest, a competing platform, Polymarket, quickly established its own market focused on the same event. Polymarket's platform currently shows a 43% probability that El Salvador's Bitcoin reserves will indeed reach the $1 billion mark by December 2025. Suggesting a strong conviction among market participants. Kalshi has been monitoring this particular bet since mid-August, and prior to this recent surge, the odds had remained relatively stable. The sudden increase in speculative activity suggests a potential shift in market sentiment or the emergence of new information influencing these predictions. Despite the palpable optimism reflected in these prediction markets, significant questions persist regarding El Salvador's official policy on Bitcoin acquisitions. Earlier in July, key financial figures within El Salvador, including the central bank president and the finance minister, stated that the country had ceased its Bitcoin purchases. This statement was made following the finalization of a substantial $1.4 billion loan agreement with the International Monetary Fund, IMF. However, President Bukele and the official Bitcoin office have continued to announce new Bitcoin acquisitions, with the country's currently reported holdings standing at 6,282 BTC, valued at approximately $709 million. This discrepancy between official pronouncements and ongoing purchases fuels the ongoing debate. Interestingly, neither Kalshi nor Polymarket have yet introduced dedicated markets to address the earlier controversies surrounding El Salvador's Bitcoin dealings, focusing instead on the future valuation milestone. The surge in prediction market momentum also coincides with a significant $15 million fundraising announcement for Clearing Company, a new platform aiming to enter the prediction market space. This broader trend indicates a growing appetite for sophisticated financial instruments and speculative tools within the digital asset ecosystem. The ongoing discourse surrounding El Salvador's Bitcoin strategy continues to capture international attention, particularly as the nation's digital asset holdings inch closer to the coveted $1 billion benchmark. This fascinating financial foresight is just the beginning of our deep dive. Next, we're shifting gears to explore a major performance shift shaking up the digital asset world. Ethereum outshines Bitcoin, a new wave of institutional capital reallocation. In a significant development that could signal a new era for digital assets, Ethereum appears to be demonstrating a notable structural outperformance compared to Bitcoin, attracting substantial institutional inflows. This trend suggests a potential shift in capital allocation strategies as investors increasingly favor Ethereum's ecosystem and future potential. The digital asset market has long been dominated by the narrative of Bitcoin as the primary store of value and the leading cryptocurrency. However, recent data and market sentiment indicate a growing interest in Ethereum, driven by its robust ecosystem, upcoming technological upgrades, and its role as the foundation for decentralized finance, DeFi, and non-fungible tokens, NFTs. Institutional investors, often characterized by their cautious approach and focus on long-term value, are reportedly increasing their exposure to Ethereum, a move that contrasts with the more speculative or diversified strategies previously observed. This potential reallocation of capital is attributed to several factors. Ethereum's transition to a proof-of-stake (PoS) consensus mechanism, completed with the merge, has significantly reduced its energy consumption and introduced staking rewards, making it a more attractive proposition for environmentally conscious investors and those seeking yield. Furthermore, the ongoing development and implementation of Ethereum improvement proposals, EIPs, such as those aimed at reducing transaction fees and increasing network scalability through upgrades like sharding, are seen as crucial steps towards fulfilling Ethereum's potential as a global settlement layer for digital applications. The narrative of Ethereum's outperformance is supported by increasing inflows into Ethereum-based investment products, such as exchange-traded funds, ETFs, and other managed funds. While Bitcoin ETFs have seen considerable attention, the specific inflows into Ethereum-focused products suggest a targeted interest in the altcoin market leader. Analysts point to the increasing utility of the Ethereum network, with a vast array of dApps, DeFi protocols, and NFT marketplaces operating on it, creating a strong network effect. This utility, combined with the potential for capital appreciation, is drawing institutional capital that might have previously been solely allocated to Bitcoin. This shift, if sustained, could have profound implications for the broader cryptocurrency market. It might indicate a maturing market where diversification beyond Bitcoin is not just a speculative play, but a strategic allocation based on differing use cases and technological advancements. The outperformance could also influence future product development and investment strategies, potentially leading to a more diversified institutional approach to digital assets. The market will be closely watching whether this trend represents a temporary divergence or a fundamental, long-term reallocation of institutional capital, marking a new chapter in the digital asset landscape. This intriguing capital shift sets the stage for an even broader discussion on market dynamics. Up next, we're diving into the core of capital markets and Bitcoin's undeniable role within them. Capital markets in flux. Why Bitcoin is becoming an essential asset in a shifting financial landscape. The global capital markets are undergoing a significant transformation, characterized by dynamic shifts in investor behavior, economic policies, and the increasing integration of digital assets. In this evolving environment, Bitcoin is emerging not just as an alternative investment, but as a crucial imperative for institutional investors seeking to navigate and capitalize on these changes. Traditionally, capital allocation has been dominated by established asset classes like stocks, bonds, and real estate. However, the persistent low-interest rate environment, coupled with inflationary pressures and geopolitical uncertainties, has prompted a reevaluation of conventional portfolio strategies. Investors are actively seeking assets that offer diversification, potential for high returns, and a hedge against systemic risks. Bitcoin, with its decentralized nature, finite supply, and growing acceptance as a digital store of value, fits these criteria for an increasing number of sophisticated market participants. The Bitcoin imperative is being driven by several key factors. Firstly, its performance as a high-growth asset class has been undeniable, with significant price appreciation over the long term. This track record makes it attractive to institutions looking to enhance portfolio returns. Secondly, its uncorrelated movement with traditional assets provides a valuable diversification benefit, helping to mitigate overall portfolio risk, especially during periods of market volatility. As institutions grapple with the interconnectedness of global markets and the potential for synchronized downturns, Bitcoin's independent price action offers a compelling hedge. Moreover, the increasing institutional adoption, evidenced by the establishment of Bitcoin ETFs, the integration of Bitcoin into corporate treasuries, and the development of regulated custody solutions, lends legitimacy and accessibility to the asset class. This growing infrastructure and regulatory clarity are crucial for institutional investors who operate under strict compliance and risk management frameworks. The narrative is shifting from Bitcoin as a fringe digital currency to a recognized asset class with unique properties that complement traditional portfolios. The reallocation of capital towards Bitcoin is also influenced by the broader digital transformation occurring across industries. As businesses and economies increasingly embrace digital technologies, assets that are native to the digital realm are gaining prominence. Bitcoin, as the pioneering and most established digital asset, is at the forefront of this trend. Its underlying blockchain technology offers transparency, security, and efficiency, principles that resonate with the modern financial system's drive for innovation. Understanding these capital market dynamics is crucial for any investor looking to position their portfolio for the future. The integration of Bitcoin into mainstream finance is not merely a trend, but a fundamental shift, reflecting a broader redefinition of what constitutes a valuable and resilient asset in the 21st century. As capital continues to flow into this nascent asset class, its role within the global financial ecosystem is set to expand, making it an imperative for institutions to engage with and understand. The strategic positioning of assets in this shifting landscape is critical. Now, let's look at a specific example of this strategy in action, focusing on Japan. Metaplanet embraces Bitcoin, Japan's bold step towards institutional adoption and index inclusion. In a move that signals a significant leap for digital asset adoption in one of the world's largest economies, Japanese company Metaplanet has announced a strategic shift, designating Bitcoin as its primary treasury reserve asset. This bold decision not only highlights a growing confidence in Bitcoin's potential as a long-term store of value, but also positions Japan at the forefront of institutional integration of cryptocurrencies. Metaplanet, previously known for its focus on the e-commerce and travel industries, has fundamentally altered its corporate strategy to align with a Bitcoin-centric treasury model. This pivot involves converting a substantial portion of its corporate assets into Bitcoin, a move inspired by the success and strategy of companies like MicroStrategy. The company has articulated a vision where Bitcoin serves as a critical component of its financial stability and growth, aiming to leverage its unique properties to navigate economic volatility and enhance shareholder value. The implications of this decision extend far beyond Metaplanet itself. It represents a potential watershed moment for institutional adoption of Bitcoin in Japan, a market that has historically been cautious regarding cryptocurrency regulation and integration. By taking this decisive step, Metaplanet is not only setting a precedent, but also potentially influencing other Japanese corporations to reconsider their own treasury management strategies. This could catalyze a broader acceptance and integration of Bitcoin into the Japanese financial ecosystem, paving the way for a new era of strategic capital allocation. Furthermore, Metaplanet's strategy includes aspirations for Bitcoin's inclusion in major global indices. Such an inclusion would dramatically increase Bitcoin's visibility and accessibility for a wider range of institutional investors, further solidifying its position as a legitimate asset class. Achieving index inclusion would require meeting stringent criteria related to market capitalization, liquidity, and regulatory compliance, suggesting that Metaplanet is preparing for a long-term, compliant integration into the global financial system. This forward-thinking approach underscores the evolving perception of Bitcoin from a speculative asset to a strategic financial instrument. The company's commitment to Bitcoin is reinforced by its plans to raise capital specifically for Bitcoin acquisition, signaling a clear and unwavering dedication to this new corporate direction. This strategy is not without its challenges, including market volatility and regulatory uncertainties. However, Metaplanet's proactive stance and clear communication of its Bitcoin Treasury strategy demonstrate a calculated approach to managing these risks. The move is being closely watched by the global financial community as a potential indicator of future trends in corporate treasury management and institutional adoption of digital assets, particularly within major economies like Japan. And that wraps up our deep dives into these critical financial shifts. But before you go, let's hit you with a rapid-fire recap of today's biggest stories. All right, crypto crew, that was a whirlwind of updates. El Salvador's Bitcoin Treasury is seeing massive attention on prediction markets. Ethereum is potentially outperforming Bitcoin with major institutional inflows. Capital markets are seeing a Bitcoin imperative, and Japan's Metaplanet is making bold moves with its Bitcoin Treasury strategy. Don't miss out on the next big move. Hit that like button if you found this valuable, subscribe for more cutting-edge crypto news, ring that notification bell so you're always in the loop, and let us know your thoughts in the comments below. You can also follow us on all our social channels for even more real-time updates. We'll see you in the next one.